Hello, good afternoon. You're watching Market Fatafat on ET Now with me, Snehisha. This is a show where we'll be taking you through all the big buzzers in today's trade, give you a fundamental check on why they're buzzing, and also some of them will be discussed on the technical charts by our expert who we'll be connecting with in just a short while from now. Before we do that, before we start talking about all the big buzzers, and mind you, we'll be doing all of this in under a minute. But before we do that, let's take a look at what the markets are up to right now. Nifty holding up pretty steadily above that 23,300 mark. We've slipped below 23,350. But nonetheless, looking good, a 0.5% uptick coming in on Nifty, very stable moves coming in today. So that is something that is looking good for the markets. Let's take a look at what the Sensex is up to, because in tandem with the Nifty is where the Sensex is also right now. Almost a 0.4% uptick coming in on the Sensex right now as well. Looking okay above that 77,000 mark for now. Let's take a look at a Nifty Bank, because that's one of the outperformers in today's trading session on a sectoral basis. Almost a 1.5% uptick coming in on Nifty Bank. Also right now, the private banks have been doing pretty well. It's also the PSU banks that are lending some support over here. India wakes up 1%. Not much to worry about in today's trading session, but it's the broader markets that are clearly stealing all the spotlight in today's trade, because you have Nifty Midcap that is doing pretty well for itself, up 1.1%. But it's really the day of the small cap trade, because once again the small cap index is outperforming its peers, a 1.5% uptick coming in on Nifty small cap as well. Very quickly, sectorally, PSU banks, your top gainer in today's trade, followed by metal, realty, Nifty Bank, energy, financial services, auto and media. The three sectors that were in the red continue to be there, the likes of FMCG, pharma and IT. These are your top drags in today's trading session. A couple of pocket of stocks, the likes of the quick commerce space in action on the back of brokerage notes. Sugar stocks are robust today, and we'll be telling you all of that and why these stocks are robust just in a short while from now. And to do that, let's bring on board our technical expert for the day, Ashish Kayal, founder and CEO at Wave Strategy Advisors. And from our research team today, we have Gaurav joining us. Good afternoon to both you gentlemen. Ashish, let's start with you. First up, Maruti Suzuki on the charts is what you have picked out. Yesterday, we've seen a very bullish brokerage note coming in on this one. The stock was up by 2.5%. Over the course of time, also, Maruti Suzuki has been a consistent performer. Tell us what's the outlook on the charts going ahead. What are the next key levels that you're watching for Maruti?
Absolutely. Afternoon to you and all the viewers. If you look at Maruti, we can see that the stock formed a very important bottom around 10,750. There was a triple bottom formation from where it sharply rallied on the upside. And even yesterday, there was a gap up opening. I think the stock is poised to move towards the level of 13,250 on the upside. The overall outlook looks positive right from short-term to medium-term perspective. And on the downside, the gap area around 11,750, which is yesterday's gap area, is the near-term support. So 11,750 is the support, 13,250 is the target. Risk reward looks appealing for this stock.
Okay, looking good for Maruti on the charts. Going ahead, let's talk about a space that's seeing some sweet gains today, and that's the sugar sector. The likes of EID Perry, Praj Industries, Balrampur Chini, all of these stocks are doing very well in today's trading session, and this is on the back of a source-related news flow that the government is likely to take the final call on ethanol price hike. The government is likely to take this call, and the Union Cabinet is also likely to consider ethanol price hike proposal. The price of ethanol produced from B-heavy molasses may be increased by approximately 2 rupees per litre, and the price of ethanol produced from sugarcane juice may be raised by 1.5 rupees per litre as well. The Cabinet may also regularize incentives provided, and also on the back of this, we have a statement coming in from Nitin Gadkari slightly earlier on ethanol blending. It's along the expected lines where he says that the target of 20% ethanol blending will be achieved in the next 2 months. And also some reports suggest that the Indian government is soon likely to take a decision on increasing the minimum support price, which is the MSP on sugar. A couple of positive news flows and exclusives coming in, source-based exclusives coming in for this sector. Reports are indicating some positive news on the cards for the sugar space. On the back of that, EID Perry, Balrampur Chini, Praj Industries, all of these stocks are doing very well in today's trading session. On that note, Ashish, coming to you, Praj Industries is also something that you've picked out on the cards for us. Stock doing very well in today's trading session on the back of fundamentals. Technically, how's the stock looking today?
If you look at Praj Industries, we can see a very sharp rise on the upside over past 2 days. The stock corrected also a few days back sharply, but I think there is some kind of a buzz in the sugar space, and Praj Industry can do well from here also. We can expect the stock to move towards the level of around 833 on the upside. And today's low, which is around 751, can be used as a very strict stop loss.
Okay, that's the outlook coming in on Praj Industries. Gaurav, coming to you, Axis Bank is something you've picked out. Numbers expected later in the day-to-day post-market hours. Tell us what the outlook is.
Well, yes, the first private sector bank to come up with their third quarter's numbers, and when we look at the expectations, we are getting 9% loan book is what the street is penciling in for Axis Bank. And when we talk about deposit, they are expecting around 11% growth on a year-on-year basis. Other than that, net interest income is likely to follow the same trend as loan book. They are expected to grow at around 9%, while PPOP may grow somewhere in the range of 14%. When we talk about provisions, in this quarter, we may see provisions going up a little, and the reason being that Q3 is usually weak for agri, and at the same time, street is also penciling in some kind of weakness in the retail segment, and that is the reason we may see some impact on profitability. But overall, from management, any kind of commentary on the slippages, how they are seeing unsecured segment, any kind of commentary on deposit mobilization and net interest margin is going to be a key, because now street is expecting net interest margins to decline almost by 6 basis points to around 4% level. Other than that, any kind of changes in the loan book mix is also something to be watched out for in Axis Bank. And lastly, any kind of commentary which is going to be on the sectoral outlook is also going to be a key thing to watch out for, because this is the first big private sector bank to come out with the third quarter results. So definitely on back of this, when we talk about the stock performance also, it is up more than 1%. So on back of this, we will be watching out on Axis Bank.
Bank can focus on the back of that earnings preview, earnings lined up after the market today. Ashish, you've also stayed with the private banks themes, and Kotak Bank is something that you've picked out for us on the charts. Last 6 months, last 1 year, absolutely flat. No return coming in from this stock. Now in 2025, do you see a reversal on the charts for this one? Can we expect some gains coming out of this stock, or is it going to be a lackluster year for Kotak once again?
See, if you look at Kotak, I completely agree. It has been many years now since the stock has not done anything, and it has been just consolidating within a very broad range. If you look at it, 1960 on the upside and on the downside 1700. That's the range that the stock has been moving over the past many weeks as well. So, but having said that, I think it is bouncing back from the lower end of the range again from here, and I'm expecting it to move towards the level of 1900 again on the upside. So the overall tone is bullish as of now over short term. What is positive about Kotak is that in the recent carnage that we saw in Bank Nifty, Kotak did not contribute much on the downside, and it bounced back sharply. So it looks like relatively outperforming, and we can expect the target of 1900. Maintain a stop loss on the downside for the stock at around 1760 levels.
The next possible upside that Ashish is spotting on Kotak Bank. But while we are talking about private banks and financials, do they have what it takes to lead the street to the new year in this new year? What do our top market experts think? Let's go across and listen into some of the views coming in from very prominent market experts on the entire banking space.
De-rating of the banks has already started globally. India is a bit late to realize that, and that's the reason I personally feel de-rating of this sector has already started. Maybe PSU has been beaten down, to a certain level. They were all traded in the hated zone, so they have come back. But as a sector, I think I'm more bullish on the digital side of the business. When CBDC come into picture, a lot of things, commercial bank relevance will change. They will not exist in this form which we are dealing with. You will start dealing with more with the central banks in some manner.
People are looking at financials from a valuation, and the fact that it's been dead money for the past 2 to 3 years. A lot of the big name private sector banks have done nothing for 3 years in a row. But I am still not fully convinced that now is a good time to put money in financials. System credit growth is down to 11%, which was about 13% in the second quarter. I don't see any major NIM expansion anytime soon.
A whole host of PSU and other private banks have hit 52-week lows and gone lower. I think financials could lead the way. They are under-owned, they are hated, and everybody in the street knows that the MFI space pain will continue for the next several quarters. People are unwilling to look at bank and bank balance sheets. The reality is some degrowth or reduction of growth, rather not degrowth, reduction of growth has come in. And my feeling is that no better place to invest in, to my mind, than the financials, which would probably lead the next rally.
The valuation for banks again will become attractive. Globally, if you see, banks have done well because there's a reflation trade. Inflation being high is good for banks. You look at the performance of Bank of America, the US Bank, Citigroup, etc. They've done exceptionally well. Same with Hong Kong banks. Names have come back, credit growth has come back. So there's no reason that should not happen in India. There was a pain over last 1 year which came because unsecured lending was under controlled. That had impact on NIMs, that had impact on delinquencies. I think that's going to go off in a couple of quarters.
Okay, well, on that note, we'll slip into a very short break on this edition of Market Fatafat and keep it going with more buzzers just on the other side. Hi there, welcome back to Market Fatafat. Let's keep it going with all the big buzzers. And Ashish, on the technical charts, you've picked out Bharat Dynamics for us. Now, last 6 months, the stock is seeing quite the amount of consolidation coming in, a 25% drop from its earlier stock price. Tell us if you are spotting a reversal, some recovery on the charts, because last 1 year, it's given 30-odd% returns. Last 6 months, 25% lower. Tell us what's the outlook going ahead.
Yes, if you look at Bharat Dynamics, I completely agree. The stock has given, negative returns if you look at a few weeks back. But if you look at now, the stock has managed to bounce back from its lower levels of around 1100, where there was a nearly double bottom kind of a pattern, bounce back on the upside. So over short term, we can expect the stock to move higher towards the level of 1300. So one can trade the stock from the short term perspective for the targets of 1300 on the upside, and on the downside, one can maintain a stop loss for the stock at around 1130 levels.
Thanks for that view coming in on Bharat Dynamics. Let's talk about another stock that's in focus today, and that is Zomato, on the back of multiple brokerage notes coming in. First up, let's talk about what CLSA has to say on that stock. They've added that stock to their high conviction outperform list, with the target price also been hiked to 400 rupees from 370 earlier. They believe the correction offers a great opportunity to accumulate this stock, and they believe that the entire quick commerce profit pool is set to expand within the next 3 years. They've built in a 51% revenue CAGR over FY25 to FY27, and they expect quick commerce margins in Q3 to be slightly softer. But then again, they also say that this is only on the back of the aggressive expansion that the company is doing. It will reverse in the short term, and it's not too much to worry about. On similar lines, then, JP Morgan has come out with a rather bullish note. They've maintained an overweight rating on Zomato, target price of 340 rupees per share. Also an overweight on Swiggy with 730 rupees per share is the target price for that one. They believe that the current share prices are attractive for both Zomato and Swiggy after the 18% recent correction that both these stocks have seen. The entry points look attractive right now. Blinkit and Zepto have crossed their FY25 store targets in Q3 itself. Zepto is leading the pack with Blinkit marginally behind, and in terms of store additions, they're also seeing that the rapid expansion that these companies are trying to undertake in terms of dark stores, only Blinkit's balance sheet has the potential to absorb this kind of impact coming from such an expansion. So very bullish note coming in from both CLSA and JP Morgan when it comes to Zomato. And that stock is holding up well in today's trading session. But Gaurav, let's come to you, talk about Minda Corp to us, because yesterday we've had a news flow coming in on an acquisition. Tell us more about why the stock is a buzz today.
Well, yes. Minda Corp is in focus, and the reason being that the company has now acquired 49% stake in Flash Electronics, and this acquisition is done at a cost of around 1300 crore rupees. Now, this investment is actually a strategic partnership, and this will help unlock synergies for Minda Corp. When we talk about Flash, it has 8 manufacturing facilities, and the company is into manufacturing component for 2-wheeler, 3-wheeler and 4-wheeler categories. Now, what company has said is that the Flash will help the company to create fastest growing EV platform in the country. Other than that, what they are also saying is that it also offers them cross-selling opportunities and also synergies. Let's not forget that Flash is deriving 20% of its revenue currently from the EV segment, and in FY25, Flash is expected to achieve revenue of around 1500 crore rupees. Now, when we talk about the entire valuation, it is done at an implied valuation of 25 times price to equity, and management also says that this deal is going to be EPS accretive. On the back of this news, when we talk about stock performance, it is up almost by 4%, and definitely it is worth watching out on how it performs for investors in coming days.
Okay, so that's the lowdown on Minda Corp. But on that note, we'll wrap it up on all the stocks that we are talking about on Market Fatafat. Gaurav and Ashish, thank you so much for joining us. First, we'll wrap it up on this edition of Market Fatafat. Thank you so much for watching. Closing trades up next.
If you like this video, then like, share and subscribe to ET Now.